Whew. It's a new year today, man. It's a new year today. Whoa, why is my voice a monster?
All right, man. We're gonna get started in a couple moments, man. We're gonna get started in a couple moments. Let a few people filter in. All right. I'm excited about the new year here, man. 2024 is gonna be a great year. I know everybody says, new year, new me, and everybody's enthusiastic, and everybody has goals, and gym is full, and what happens? Usually people fade, right? They start off strong. They have all these great intentions, and pretty soon everything sets back to normal. Well, you know me, I'm not. It's no new year, new me. I'm going to continuing on from I had a wonderful year, 2023. Very big year, walk of wealth, very big for me personally. And now I'm so excited about 2024. If anybody's excited about the new year, or is it just me? If somebody's excited about the new year, let me know in the comments, man. Who's here today? Please talk to me. Let me know. I'd love to hear from the crowd here. Let me see if this is working. Let me see if my Facebook is working. Hello, everyone. How are you? Let me know in the comments where you're from. Let me see. Because you know what? We're streaming. This is not just in our group. Today we are going to have Big Joe D. Happy New Year to you. Dr. D. Bernardo is in the house. Awesome. That's my boy right there. All right. It's 8:02 now. So let's get into our topic to today. All right. Let's see here. What are we doing today? Oh, yes. Okay. All right, let me get started.
All right, let's get started. How do I look, Joe? Do I look okay? Oh my God, why is this voice in here?
Answer. Okay, here we go. My voice better now, Joe? I hope so. All right, let me move this over here and so I can see what I'm doing. All right, let's go. All right, did you know that you could invest in... Hold on, let me try again. Did you know that you can invest in real estate using retirement funds? Not just in real estate, but you can use retirement funds to invest in a whole bunch of different things. You can invest in cryptocurrency. You could invest in gold and silver, like physical gold and silver. You can invest in raw land. You can flip houses. This is all with your retirement funds. Did you know that? Just a short few years ago, I had no idea, right? Like I had no idea that you could do anything. Everybody knows that I'm a real estate guy. And the only exposure I had into the stock market was my SEP-IRA, right? And I had no idea. I thought, hey, look, that's the way that retirement funds go. You put it into these funds, these Wall Street people will manage it, and that's it. So then I learned that there's whole nother world of investment, and you can even diversify your retirement portfolio into different aspects, like all the different things that I talked about. So you have a whole world of private offerings. And there's a couple of retirement vehicles that allow you to do that. One is a self-directed IRA, and the other one is a qualified retirement plan. Now, most people have never even heard of this, right? A lot of these gurus, right? A lot of these gurus that are out there, they don't even know about it. My financial advisor never even heard of a QRP. And the reason is they are not incentivized they're not incentivized by these plans. They don't get these big, huge custodian fees and assets under management fees because you are the custodian of your own money. So they don't tell you about it. Now, we're going to go into that today. This is going to be this live. I'm joined by Mr. Ramez Fakhoury, who's the vice president of the IRA Club, which has helped literally thousands of dentists launch their self-directed IRA. So this guy is one of the leading experts in self-directed IRA. So I'm very excited to have him. But before we get into today's episode, Happy New Year to everybody. 2024, those of us that made it, we're still here, alive and blessed. Show gratitude, be humble, right? Work hard, serve your families. I had a good friend of mine passed away December 22nd, a few days before Christmas. He was 34 years old, succumbed to a rare form of cancer, left behind 2 young children, age 5 and 4. Very, very unfortunate state of events. And I think that we should all just take a moment to have gratitude for even being here and opening our eyes. Sometimes we complain about getting old and all of this stuff, but hey, getting old is a privilege denied to many. So anyway, that's that. He was a dear friend of mine. It was a tough time. It was definitely a tough time. We spent the morning at his apartment. We took a bunch of presents for the kids. We tried to bring some cheer to their lives after they just lost their father. All right. In a more lightened mood, we closed on we had a 288 unit multifamily value add property in booming Dallas with a first-class sponsor. That we had a fund. That fund sold out. We had incredible interest in the deal, and I was very enthused by that. Not only for the people that invested in the deal, but so many of you reached out and just wanted to know about the deal and find out more. And maybe the timing wasn't right, maybe the deal wasn't right, but I'm just happy that people are starting to get an awareness of this world of private offerings, really taking it serious and starting to diversify and build a predictable streams of wealth and income. We had 8 brand new investors that had never invested in real estate invest in this deal, which was absolutely awesome. 8 dentists. One of them is my boy right here, Dr. DiBernardo here, right? He's a big stock market guy. He took a plunge to the real estate guy, but he's very savvy and astute investor. He's been getting education and knowledge, and then he took action. So shout out to him. The other great big of news is that I'm so excited. We don't have the link yet ready for you, but we are launching the Prosperous Dentist Summit. It's a virtual summit. It'll be January 27th and January 28th from 10 a.m. to 2 p.m. both days. It's a free summit, right? And there'll be a VIP upgrade where you can, we'll talk about the specifics, but the prosperous dentist. Now, what does a prosperous dentist mean to you? To me, it means that you've reached prosperity in the 5 areas of life. One is finances, right? Second is mental and emotional well-being. Third, physical health. Fourth, relationship, right? Prosperity in your relationships with your family and your friends and loved ones. And then finally, the 5th one, which is, I guess I should know. Giving back, right? Philanthropic prosperity, right? Being remembered for the legacy, for what you've left for others, and the good that you've done for society. So those are the 5 areas of prosperity. And if a dentist can try to achieve prosperity in all those areas, that is a truly successful dentist, not just in the profession, but in this game that we call life. Now. What was I going to say? So that's coming up January 27, 28. So definitely look out for that. We're going to give you more information about that. Ton of great speakers, right? We have oil and gas gurus, investment guru. We have some serious world-class multifamily real estate operators. We have some really high-level, high-impact dentists that are going to talk about different areas of a prosperous dentist. In all the 5 areas that we mentioned, it's going to be awesome. It should be full of value and should leave you, like I said, should have a lot of value. Now, Let's get into today's topic. This is episode number 20, the journey to financial freedom. And we are joined with, like I said, here, let's get right into it here. So today's topic is about that. It's how you can decide what's the best way to go with your retirement dollars. Brought on a very special guest today, Mr. Ramez Fakhoury of the IRA Club. He's an expert in this topic. He's helped literally hundreds of doctors to navigate this world. And I'm enthused to bring him on here today in our club. So without further ado, let's bring on my man, my friend here, Mr. Ramez Fakhoury.
John, thank you so much for having me. And don't worry, you didn't steal my thunder just yet. So it's always a pleasure having you. And you know, one of the things that I want to say about you, John, is I love what you do because one of the foundations of IRA Club is education, right? You're educating your fellow doctors, your fellow investors on a topic that's near and dear to my heart, which is called self-direction, right? We're talking about retirement account. You know, as much as I hate to say this, now more than ever, an employer's 401k, referred to as the poor man's pension, was basically a way to help the system, and in particular Congress, to you know, defer taxes, to help individuals grow their retirement accounts tax-free. The problem is the system has been hijacked, right? And we're going to get into that a little bit later, you and I, and given a thorough breakdown of exactly what you talked about. You hit the nail on the head. If you do not take control, nobody's going to care more about your money more than you do. And if you do not take action at some point in your life, right, you're going to work forever. You know, John said it again. It's not that you're going to retire broke. You're just going to work forever until you die. And why are we doing this? Why are we educating you? Because we want you to spend more time with your families, yourself, to go on vacation, whatever your hobbies are. That is the issue and the dilemma that we're always facing. And we're going to break it down into some thorough numbers, John. And I think that it's going to be unbelievably beneficial to grow your retirement. John, do you think we want to jump right into it? Like a little bit of a PowerPoint presentation? Let's just get into it.
Absolutely, yeah.
All right, John. So we are here to talk about how to harness the power of a self-directed retirement account. Remember, and I'm going to get into the nitty-gritty. And before I do, Ramez Fakhoury here again. John introduced me. I'm the Vice President of IRA Club, one of the managing partners. But enough about me. I want to talk a little bit more about IRA Club, because that's what we're here to discuss. Because what we believe here at the IRA Club is by offering you guys a first-class customer experience to control your retirement funds and diversify into different asset classes. IRA Club was established back in 2008 by Dennis Blitz, President of IRA Club. We currently have a little over 15,000 IRA Club members, manage $1 billion under AUM. We've helped, as John mentioned, educate over 250,000 individuals on how to grab and get control of your 401ks, IRAs, HSAs, TSPs, and in particular, the one question I always like starting off today is, how safe is your retirement account? Think about this, right? Everything and anything is working against your retirement account. We're talking about the stock market being down 20%, in particular the S&P 500. We know that the US has a progressive tax system, which means taxes will never be cheaper than where they at right now. We know that every single government program, from Medicare, Social Security to Medicaid, is in complete shambles. The one thing that I will say that's been really bothering us as Americans is inflation. The point I'm trying to make is inflation isn't going anywhere. It's here to stay. So if you know that all of these things are currently working against your retirement account, how do you protect yourself? And the answer is very simple. Diversification. Inflation is eroding the power of the dollar, right? That also goes suit with your retirement dollars. So how do you protect yourself knowing that you're pretty much your entire 401k, IRA, or any qualified retirement account sits where? Inside the stock market, right? So not that we have anything against the stock market here. Let me be very clear, and I'm going to get into that a little bit later. But the point is, you have to diversify not only your personal dollars, but your retirement dollars. So the majority of you that are listening to me right now, in full disclosure, don't know that you have access to funds that you currently have, maybe, not everybody, but maybe that you currently have to diversify into a different asset class. In fact, when you're looking at this chart, believe it or not, for the last 5 years, this is what an IRA Club member. So one of the beauties of IRA Club, us being, just think of us like Fidelity, Vanguard, Schwab, TD Ameritrade, right? These are the big four. I refer to them as the four horsemen in our industry. Think of them, think of IRA Club, better yet, just as one of these companies, right? The only difference is your money, again, is tied into the stock market, where at the IRA Club here, you could do stock options with us, you could buy bonds with us, but we let you use your 401ks and IRAs to diversify into different asset classes. And IRA Club members dictate a lot of what they're investing in. In fact, as I just mentioned, in the last 5 years, you've seen them shift their money within the stock market over into alternative assets like real estate, syndications, multifamily, oil and gas. And the list goes on, to be honest with you. But that's the flexibility that we give you here at the IRA Club. So It's always the same 4 topics of concern that I always see here at the IRA Club. Number 1 is lack of knowledge. Okay. I hate to say this. Most Americans are not financially literate. I refer to this here at the IRA Club as the herding method, right? If my sister, brother, and friends are doing this, it must be the right thing to do, right? My mom and dad did it. My grandparents did it. It must be the right thing to do. That system does not work. Remember, for every dollar that you make in your lifetime, they're taking almost half of your growth. So that's number 1, financial literacy, right? When you put all of your retirement funds within the stock market, who's taking all of the risk? John, you know this answer.
Well, you are.
Exactly. You are. Think about that. The only time that you get paid is when the market's up. If your 401k is flat or down for the year, do they still make their money?
Okay,
The Fidelities and
money. Yes, they make their assets.
They do 100%. Dennis Bullock, again, president of IRA Club, refers to self-directing as a strategy, right? A gift to the American people. The problem is, I think it's one of the most underutilized ways to invest your retirement dollars, right? Because the true benefits behind self-directing is giving you the flexibility to invest in what you know and understand best, right? Not to mention, I don't want to get into it, the flat fee models, but it's also the icing on the cake for me is tax-free or tax-deferred growth. And what most investors that don't know this, when you use your retirement funds to invest in real estate, multifamily, whatever the case may be, you eliminate all taxes across the board. John, you'll be in shock to know that not even IRA Club members know this. It's not just the federal tax rate, it's state, Medicare, social, it's everything. So I live in Illinois, right? IRA Club is located in Chicago, right? So right off the bat, I'm eliminating 4.5%. Then I'm in the highest tax bracket. So think about that. Think about that. For every dollar that I save, right, myself, I'm almost saving myself. For every 100,000, please forgive me, I'm saving myself almost $50,000 in tax, being in the highest tax bracket. So that's crucial. Why? Because you grow your wealth 25 to 50% faster, depending if you're using a traditional account or a Roth account. So those are the 2 most common retirement accounts, traditional, Roth. The only differences between the traditional and Roth is when am I going to pay the taxes? Plain and simple. Traditional, if you were going to make a contribution, whether it's a 401k, an IRA, you're taking a tax deferred, which means you're paying the taxes later when you make a contribution, let's say for $7,000, $10,000, $20,000. When you do take it, it's referred to as the RMD, required minimum distribution. So you can either start pulling at the age of 59 and a half or the RMD, which is 73 years old. So that's when you pay the taxes. The Roth, you're paying the taxes up front on the seed. Moving forward for the rest of your life, those capital gains are tax-free, and you pass it along to your spouse and your heirs, also tax-free. So I want you to see the difference between using personal dollars, the money that you have, let's say at Chase Bank, Bank of America, wherever you're banking, versus traditional versus Roth, and how fast it grows your ROI when you invest. I'm going to use simple math. There are these great calculators on the IRA Club website. Tax versus tax-deferred versus tax-free. I always like using simple math, 10%, but notice it's in double digits. The stock market's going to give you what, John, in every 10-year span?
I would say 7.5.
Hit it. You hit the nail on the head. About 7 to 8 every 10 years. If it's longer, right, depending on how many recessions that we're in, those numbers actually drop. But let's use simple math. Double-digit returns. You're always striving for double-digit returns. Otherwise, to John's point, you're going to work forever. 10% is your annual rate of return. Let's just say for the next 10 years, if you had an old employer 401k or an IRA with a classical brokerage firm, and you want to move over a portion of that, let's say $100,000, for the next 10 years, I want you to take a look at what your returns on investment would be with your personal dollars if you have a traditional IRA or traditional 401k versus a Roth. Look at those numbers, 10%, 18%, and 33% returns on investment in a 10-year span. You made an extra $100,000. Why? Because you avoided Uncle Sam. I'm a huge advocate of a Roth IRA. In fact, everybody should have one. That's the truth. John, many of your colleagues, many of our family members, my parents, we all remember the 2008 crash. Those individuals that thought they were about to retire, they were between the ages of 50, 55, or 60, right? That had, let's say, 250,000, or let's just say 500,000 for easy numbers, right? Within a 401k, and the 2008 Great Recession hits, you lost half. Guess what? You couldn't retire anymore. You had to work an additional 4.3 years just to get to that break-even point. Talk about a sham. Talk about a joke. Well, fast forward to 2022. I just told you that you lost 20%. That's what Fidelity told you. That's what CNBC told you. John, where do you think 2023 is heading?
I think we're headed for more of the same. I think we're going to head for worse times.
So you just gave up. You just said it. So listen to yourself. And I'm not talking about you, John. I'm talking about the individual that's listening. You just lost 2022. You're going to, at best case scenario, break out even in 2023, which means you lost, because that to me means you didn't make any money. So you just gave up 2 years of your life, bare minimum. And now guess what you're going to be doing in 2024 or 2025? Playing catch up. Just to get into the next slide and just how in trouble Americans are. There's only 1.8 million retirement accounts that have $1 million or more. Think about that. There's 64 million households, right, that have IRA funds that are allocated in the market. but only 1.8 million of that 64 million have $1 million or more. So John, what do you think that those people are doing? They're just in control. That's the name of the game, control, right? That's what I'm trying to illustrate more than ever is you need to get access to those dollars, which you already have. And my thoughts are, how do you do so? So what does the IRA Club offer? You'll never be lost in this process. We're going to walk you every step of the way. That's one of the biggest challenges that I face, that our entire team that travels faces, is they think that this is hard. It's not hard. It's a 1, 2, 3 step process, right? Always remember that your money here at the IRA Club is FDIC insured. Not to mention, IRA Club does have a trading platform, right? In fact, we are the first self-directed retirement account to offer an AI platform. So I mentioned this earlier. It's not that we have an issue with the stock market. You just need to allocate your money in a different way. A flat fee, straightforward pricing. Why is that so crucial? Many of you guys do not realize this. 62% of Americans actually don't realize this, that they don't realize that they're paying hidden fees on the back end. Only 18% of Americans actually know how to calculate retirement accounts. In fact, the 401k, right, itself sits 83% of the time within a mutual fund. Mutual funds have the highest fee-based structures. This is something you should actually Google and research yourself. In fact, the average mutual fund has 4.2% incorporated in fees.
Wow.
These are, yes, John, that's a scary number, especially the first 5 years, 4.2%. But these are the terms that you need to be looking within your employer 401k, within the statement, within the contract, right? Find out what these are. Talk to your HR department. If you guys have an HR department, find out what those numbers are. I refer to these as termites, just nitpicking at your retirement account, okay? When you look at the national average, whether it's an IRA, 401k, 403b, 457, it traditionally is between 1 to 3%, especially if it's managed by a fiduciary. Why am I bringing this to your attention? I just mentioned our flat fee model. It's $195 per membership. In fact, this is the actual PDF. What does that mean when you're a member? That's per IRA account, right? Per HSA account, per simple IRA account, per SEP. We also do solo 401ks, John. I think you know that already. We discussed that earlier. They're a little bit more just because of the way that they're structured. Most people do not know this. Solo 401k QRPs have 200 pages worth of rules and regulations, when an IRA only has 8 pages worth of rules and regulations. So an IRA is a lot easier to administer. And the reasons why I don't like talking so much about solo 401ks, believe it or not, less than 9% of Americans qualify for a solo 401k or QRP. Most Americans really just qualify for an IRA. So, but these are the numbers, $195, and I don't care if you have 10,000, 100,000, or 10 million. The way IRA Club makes its money is per asset, per investment. It's $135. All right, unless you're doing a hard tangible asset. So when you break those numbers down against Fidelity, Vanguard, and Schwab, same numbers, 100,000, 10 years, annual rate of return, 10%. I just told you IRA Club is charging you 0.3, okay? Versus the 1 to 3%. IRA Club will save you within that 10-year grace period, $70,000. That's a 10% return. That's scary. But picture if you made 12, 14, or 60% returns on investment. $111,000. This is not my money. This is not John's money. That's your money that they're taking from you. Whether the market's up, down, or flat, no matter what, that's what they're taking from you. That's the national average. What does the process look like? I said it to you earlier. Open, fund, invest. It takes minutes to open up an IRA account. 3 ways that you could contribute or fund the account is a contribution, an IRA to IRA transfer, or an old employer 401k. So for those of you that are listening with a current 401k, unfortunately, there's not much that you could do right now, except what me and John just talked about. You're going to have to ride the wave. It's unfortunate, but we're educating you. So that way you have a game plan when you leave your employer. Lastly, choose the investment. It's as simple as that. John already stole my thunder. Thanks, John. We want to practice what we preach, right? We want to offer you to take the first step, a free IRA account your first year. I just want you to identify the investment opportunity. We'll waive the $195 the first year. The only thing you're liable for is the $135 asset fee, okay? Here's the QR code. We'd love for you to pull out your phone, scan it. It'll take you straight into, John, this is your landing page, Walk of Wealth, right? You open up the account, takes 5 minutes, upload your most recent statement from Fidelity, Vanguard, Schwab, or one of the other 10,000 brokerage firms that are out there, and let my team do its job, which is bring the funds over to you. If you have any personal questions and you would like to reach out to me directly, you could also scan this QR code, share your contact information with me. It lets me know where we met. If you know this is where you're viewing this like live stream video webinar. John, I hope this was very educational for your team. That was exactly 30 minutes, which was exactly where we wanted it to be. Is there any common questions that you feel that you hear on a day in, day out basis that you think would help your fellow colleagues?
No, first of all, thank you so much for this. I believe that this was tremendously value packed. I think this is going to help a lot of our, as you know, this group is predominantly dentists. We're all looking to, the edge, get some sort of edge, create some sort of way that we can take back control of our finances and our financial freedoms. I think the 401k plan, when it started in the late 70s, the intentions were good. right?
Yeah.
Hey, look, we need to give access to the stock market for these people, right? That there's a way that they can grow their retirement accounts. But then it was all of a sudden it was hijacked by Wall Street, as Wall Street likes to get their tentacles on pretty much anything that they can. And since then, the advantages seem to have slipped away from the person, the individual, and gone towards the hands of these managers, right? So like now it looks like the 401k plan doesn't make anybody rich except for the 401k plan managers. So here you're offering us a solution. Like, listen, there are other ways to do it. There are other ways that you can control your own money. You know, like, wow, God forbid, like you can actually have a say in what happens with your own hard-earned money, and you can invest it in other things that you may believe in more or have a strong belief in. So I believe that the value you've provided us has been tremendous.
Just elaborate, John, on just like what you talked about. You know, I showed you what the numbers were for the last 20 years, right? If you had an employer's 401k, what was it giving you? 5.63%, right?
It was like 3-point-something%.
Well, when you're incorporating inflation, right? It was like at 3%. I'm just saying, I just like to keep it real. I just want people to understand the big picture. If you actually look at the track record of the stock market, in particular, what is every fiduciary registered investment advisor always trying to be? The S&P 500, right? The S&P 500 in a 20-year span will give you somewhere about 9.5 something percent, right? Just a little under 10%. So when you actually take those numbers and break those down, it was about 321%. Do you know what asset class John trumps all other asset classes by far and away? Real estate. Real estate in the last 20 years have given you a 2,100% return on your money. So the importance of that is you have to use a portion of your retirement funds to diversify in real estate. And think about it, it grows tax-free and tax-deferred, depending on how you have it structured.
Yeah, so, you know, in our group, we talk about what the asset class we love is real estate, right? Especially passive investments in real estate, which allows us to build wealth. It allows us to build truly passive forms of income. Mm-hmm. Now, a lot of the problems is that, hey, where do I source the capital for these investments? I know I want to get into real estate. I know that I want to invest in things that will give me passive streams of income. But a lot of people, they don't even realize that they can be investing their retirement money into these things, right? Like, so it's an ability to now, like, real estate has the best returns, the lowest risk. Especially, and I have a biased point of view, I believe that the multifamily asset class will give you the highest level of returns on a risk-adjusted basis, right? So if you're investing in the right way and you're investing in housing, which the demand for it never goes away, it's like, this is a very, and also multifamily as an asset class in terms of all commercial real estate has the lowest volatility in terms of its underlying asset values. So this gives you a safety, right? It gives you a lot more safety than the stock market, which can drop 20% on a Black Monday or all these black swan events, 9/11, 1999 .com bubble, 2008 great financial recession, 2020 COVID-19 pandemic. All these things you mentioned, it takes years to recover from. Well, when you're investing in an asset class like real estate, where you don't have that underlying volatility, number one, you hedge yourself against that, right? So you hedge yourself against having to stave off retirement for several years, hopefully. The other thing that it does is it gives you outsized returns. We've seen that the stock market, especially over the last 20 years, the golden heyday of it was, as you said, was from 1980 to about 2000. But then from 2000 to 2022, stock market barely went anywhere. So if you compare that to, hey, look, instead I could have been pumping all this money into this 401k plan. I could have been instead pumping it into real estate and getting actual returns. You could be a lot wealthier, a lot further along, just by taking control of your retirement accounts and just by being able to invest in things like real estate, like what we really love here, right? So we have an even more probably radicalized view than you in terms of allocation. I mean, I think that an outsized allocation to real estate is the way to go, right? Like I believe in almost an 80-20 model where 80% goes into low risk cash flowing assets and 20% you can allocate into other things if you choose a stock market or other various businesses or gold or any type of silver, cryptocurrency, other various buckets. But yeah, so I think that's pretty much what I wanted to add to your absolutely awesome presentation. And the other thing I would want for people in this group is, hey, look, if you have questions or this is something that you think is of interest to you, hit that QR code. This guy he's as friendly as he's been friendly in real life as he appears on this podcast. So I would encourage anybody that's been moved by this that, hey, look, I want to take advantage of this, or I just don't know how. I mean, I think this is a great place for you to go in and get some objective information and learn. right? I mean, what do you think, Ramez? Is there anything else that you'd like to add to that? Or
Actually, listen, you at the end of the day, understand this. IRA Club can never sell you anything. This is strictly a strategy, right? And I'm just sick and tired of the, Americans being just taken advantage of. That's for me the biggest, one-sided, as I showed you the numbers, they don't lie. Numbers never lie. It's just so one-sided. It's unfortunate. We got to get the word out. We got to educate not just yourselves, but your children, grandchildren, get them involved in opening up a retirement account. In fact, the day your kids are born, you should open up a Roth IRA account, make that contribution for $6,500. And honestly, you're done. Just even if you want to throw it in the S&P 500, right? That's going to be $1.4 million. Okay. Tax-free. So what I'm trying to say is little things like that, okay? Although me and John love real estate, that's what we believe in, brick and mortar. You have to incorporate a portion of your retirement funds into these asset classes. A great way to hedge against inflation now more than ever is alternative assets, but also cash flowing producing assets. That's, cash flow. We always say this out loud. Cash flow is king. You don't care what the stock market's doing when you're getting cash flow, dividends, royalties, rental income. Who cares what the stock market's doing, right? So again, it's just a strategy that I want you guys all to be aware of. It's out there. John, always a pleasure having you. Thank you so much for taking the time to educate, your fellow colleagues. And that's what I love doing, right? At the end of the day.
Ramez, thank you so much for your time, man. You were awesome. You delivered, and we're probably going to have you back again at another date to talk more about this stuff. I think.
Yeah, well, let's have an open Q&A one time. Bring everybody on. Let's have an open Q&A. Ask me whatever question you want.
For that. All right, great.
All right.